Good morning. What underwriters look for and how to prepare. So, when applying for a mortgage, your file will eventually land on the desk of the loan underwriter. And think of underwriting as the final exam before your loan's approved. The underwriter's job is to verify all the details and decide if you're a safe bet for the lender. The good news, the right preparation, you can sail through underwriting with fewer delays. So, here's what underwriters look for and how you can get ready. First thing, credit history and score. Your credit score is the first thing underwriters review, and they'll check for late payments, high credit card balances, or even recent inquiries. Even one missed payment can raise a red flag. I just had to resubmit a loan just because of that. So, how do you prepare? Well, number one, pay down revolving debt before applying. Avoid opening new credit lines during the mortgage process. Review your credit report for errors and dispute any inaccuracies. Number two, income verification. So, underwriters need to be able to confirm an income figure that is stable and sufficient to cover the mortgage payment, W 2s, pay stubs, and sometimes tax returns are required. Self employed borrowers may need bank statements or profit and loss statements, and here's how to prepare. So, gather the last 2 years of your W 2s or tax returns, keep recent pay stubs and employment verification letters ready. If self employed, organize bank statements and CPA prepared financials, or talk to me about low doc loans. Number three, employment stability. Consistent employment is very, very crucial, obviously. You got to have frequent job changes or gaps in work histories or switching industries can invite scrutiny, and here's how to prepare. So, provide explanations for job gaps or job transitions and maintain stable employment leading up to closing. Number four, assets and reserves. So underwriters want to see that you have enough savings to cover your down payment, closing costs, and as well as a few months of reserves. They'll verify your bank statements, investments, and large deposits. And here's how to prepare. So avoid moving money between accounts right before applying. Be ready to document the source of any large deposits. Keep your funds in liquid, accessible accounts. Number five, debt to income ratio. So your DTI compares your monthly debts to your gross income. And most lenders prefer a DTI below 43%, but certain loan programs will allow more. Here's how to prepare. Pay down high interest credit card debts. That's the number one on a few lists now. Avoid taking on new loans or co signing for others. I've seen some mistakes. Number six, property appraisal and collateral. The underwriter will also have to review the appraisal to ensure the property value supports the loan amount, make sure there isn't deferred maintenance, that kind of thing. But here's how you prepare. Choose a home within your pre-approved price range. Be realistic about the property condition and market value. And here's your final tip. Work with an experienced mortgage broker. Call Bill. Having a mortgage broker by your side means you'll know what underwriters are looking for even before you apply, hence the point of the video. At Medallion Funds, we guide borrowers through the entire process, making sure your file is super clean, super complete, and ready for a smooth approval. You ready to get it pre-approved? Contact us today to start your home loan journey with confidence. Thanks for your time. Have a good one.